welcome back to another episode of We're So Bloody Early. Today we have with us Mr. Plan C. Welcome, Plan C.
Yeah, thanks for having me, guys. I appreciate it, and looking forward to getting into some good stuff here.
Awesome. Yes. Well, thanks so much for your time. So we generally kick things off with a brief introduction. So if you could explain a little bit about what you're up to in your day job and some of the stuff you're focused on and most passionate about, and then we'll probably take a little step back from that and dig into how you got to that point. But just a brief update as to what you're up to today.
Yeah, absolutely. I've been in crypto since 2017. I got in kind of close to the peak. I think I got in like just after the peak, but essentially bought the top or close to the top in 2017, and then just basically stayed in the market. Like I have never left. I've been extremely passionate. I took the bull or the bear market of 2018 and 19 to just basically research, listen to podcasts. So yeah, I've been in the space for a bit, and but just recently went full time in crypto. I guess 3 or 4 months ago now. About 3 months ago, yeah. So full time, just research constantly, on-chain data mostly. Just that's pretty much it right now. I'm in a fortunate situation where I'm able to. I sold my business from a past life, and I had a wellness center, and I sold that, and then just actually moved from Canada to Mexico. So some big life changes with selling my business and then moving to Mexico with my partner. My partner is Mexican, so she's from here. So, it's just living the dream here in Mexico, and get to learn about crypto all day, every day. So I'm really fortunate.
Awesome. Well, welcome, and thanks so much for sharing your time. Boys, who wants to jump in with the first question?
Get your standard question out of the way, Jigs.
How old are you?
30, 35.
Okay, yeah. Cool. Yeah, we seem to find people just around our age all the time.
Yeah, no, the guys that I'm working with, like a lot of the guys that I kind of have found online and partnered with, you never know when you meet someone or contact them. But yeah, around the same age most of the time. It's kind of like between that 30 and 40 range.
And so in terms of like you've just started doing crypto full time for the last 4 months, what does that entail exactly?
Yeah, so I work with some guys from Cultivate Crypto who run a course, and basically I teach a crypto course every 3 months. They have a course that they do called Crypto Mindset, and they have 20 modules for their course. And I met these guys just online and connected with them. I do a weekly stream with them on Sunday nights called Moon Gang. And
are they Celsius guys?
They I kind of met them through the Celsius community. Yeah, kind of. Yeah, I met them through the Celsius community initially. Actually I did in a way, because when I first started researching Celsius, almost 2 years ago now, there was like no content about Celsius back then. There was no podcast, but there was a guy called Dollar Cost Crypto that was doing a podcast, and I was just searching for Celsius content. So I found him and I just DM'd him. And basically, I was on one of his first podcasts because it was just one he was just doing for fun every once in a while. So I actually got on there and just became friends with them. But yeah, they teach the crypto course, and then every 3 months I go on there and just do one of the modules for their course. So I do a few hour presentation live on Zoom, usually like 40 to 50 slides on the on-chain data, and answer questions. And I just do that for free for those guys to support them. But I'm partnered with them and working on, different ways of monetizing kind of a following. And I'm focused right now on mainly building a following on Twitter by just posting a ton of free stuff on Twitter. And
lots of free stuff.
I spend 12 hours a day, every day, basically researching and trying to come up with unique indicators, trying to understand. I went really deep in. I'm just working on all sorts of stuff, right? And a lot of with being on Twitter 12 hours a day is you get exposed to all the other great content that other people are doing. So like you just get saturated with all this content, because I'm constantly looking for good stuff to retweet, and so I'm looking at what everyone else is doing. I'm learning about TA, even though I've never studied it, just because I'm constantly sharing good quality TA stuff.
Well, like Matty Harland and Tech Dev.
Yeah, I didn't know anything about TA a few months ago, and I still don't know a ton. But just because when I retweet these guys, like I'll DM them and I'll ask them like, what is this indicator? How does it work? And so I make sure I'm not retweeting stuff that is nonsense. it's making me learn about on-chain or about TA. And so, but yeah, I am mostly focused on the on-chain stuff. But people like to see both things. So yeah.
But Plan C, my friend, Matty here. I love to know a little bit about where and how and why Plan C eventuated. At what point did the shining or light bulb moment come to fruition, my friend, to get to where you are today?
So Plan C, it's funny how the name, I haven't shared with too many people how it started, right? And so I was just trying to come up with a Twitter account September of last year, or September 2010, I guess. And no, what am I saying? Sorry. September 2020. Yeah, September 2020. I was just like, I just knew Twitter. I didn't have an account before crypto. Like I never used Twitter at all. And so I basically was just looking for a good name. And I was just so into Celsius. Like I was just obsessed with Celsius because I just found it. I was excited about the Cell token about Celsius. And the name just kind of came to me like Plan C, because obviously it's a play on Plan B. It was really popular in the space, right? But it wasn't ever intended to be like, oh, I'm next. I'm Plan C or Plan B failed with his predictions, and so I'm going to be the new guy. It was never about that. Like I picked that name well before Plan B. Some of his predictions. I mean, I don't know. His predictions are going to probably be still fine long term with the stock to flow stuff, but people give him a hard time. But the thing is, yeah, it was never intended to like be a parody account or take any jabs at Plan B. It was just a good name, I felt, because like everything, you should have multiple plans in life, and I just thought like it's a play on Celsius, and then it's a play on. I never actually anticipated, because I never intended on having an account that I was trying to grow on Twitter. Back then, it was just literally just to interact with the Celsius community. So I mean, I was lucky that I picked a name that is easy to remember, and a name that kind of works well for
the community as well.
Yeah. I mean, I've kind of disassociated myself with the Celsius community for the time being. Just because when I put a lot of effort, like I was actually for over a year, like I was super focused on just putting out content about Celsius on Twitter. And like I grew a little bit of a following around that, but it was when I stopped tweeting about Celsius and basically focused on Bitcoin and the on-chain is when my account's growing. Like just in the last 2 months, I went from like whatever 5,000 to almost 80,000 followers, just because I stopped tweeting about Celsius. Yeah, just because I stopped tweeting about Celsius, because there's only so many people that are Cell token holders and Celsius interested people, whereas Bitcoin, I mean, it's
and that's why we're here. Bitcoin is king, and I mean, most of your charts are always around Bitcoin and Bitcoin's movements and things like that. I mean, your recent indicators or charts that you've put out with the market risk cap, Bitcoin's going to lead the market, so we need. Yeah. That's why it's so important to follow that, and where that goes, Celsius and everything else will follow.
Yeah, exactly. And that's the way I look at it. It's like, I'd like to put out some more content about Ethereum. Like there is some on, so there's the main reason why I'm focused on Bitcoin. Well, 3 reasons why I'm focused on Bitcoin. Exactly what you just said. All the coins to a degree are either fully correlated or at least somewhat correlated to Bitcoin, right? Most coins over long enough time frames, they're correlated to Bitcoin. And then also it's just the most amount of people that hold Bitcoin and are interested in it. And then on top of that, I mean, the most amount of data is available for Bitcoin historically speaking, because it's been around the longest, right? But also just with Glassnode, they do have other coins that there is some on-chain data for, but it's very limited for most coins, except for, I guess, Litecoin, Ethereum, and Bitcoin are really the main 3 that have a decent amount of stuff. But by far, it's Bitcoin that has the most amount of on-chain data. So, but Ethereum, I mean, it's definitely, there's not enough people posting about Ethereum's on-chain.
Yeah,
so,
I was going to ask if you're looking at doing any Ethereum stuff, because that's quite.
I will be next. Yeah.
If you want to accumulate more Bitcoin through an alt, Ethereum's definitely the one to do, and to have metrics like your market risk cap map with Ethereum would be very handy. So in terms of that market risk map, what's your timeframes there of picking bottoms and tops? Are we looking at like 3 months, 6 months, where you go into those ranges, or?
Yeah, for sure. So with like my strategy, it's partly my personality, but it's also partly the way that on-chain data works, is it's most accurate, I believe, over the longer time spans. So I'm sure at some point people will create, you know, metrics and indicators with on-chain that could be used on shorter time spans for like swing trading on a weekly basis, or even potentially daily.
We're not interested in swing trading or daily trading.
No, I know. I haven't done any trading. Like I'm a long-term holder. Like my whole goal is essentially to play the longer time frames of the cycle and be able to DCA out, not trying to get the top perfectly, because I understand, like, you know, I'm working on creating indexes of indicators to try and call the top, but, you know, ultimately at the end of the day, it's just trying to get out as close as possible, DCA out. And then actually it's a lot easier to get back in near the bottom. So as long as you can get out near the top, you give yourself enough of a delta between the bottom where you can DCA back in. Because usually the reason why it's easier is because we hang out at those extreme reversion from the mean levels to the downside for longer. That's historically speaking. If you look at a chart, we actually like essentially bounce off, like, or like you know, kind of grind along the bottom of the
200-week, you know, moving average, and
yeah, like the band or whatever you would call, like you see various charts where they have kind of an upper limit and a bottom limit. If you just look at the chart, like just the way that it works is we'll hang out at those lower levels longer than we will at the top levels. So, and quite a big difference. So it's a lot easier to get in near the bottom. And like, yeah, I mean, it's really not that hard. I mean, to get in near the bottom, you just have to be able to identify a max pain. You just have to be uncomfortable and be willing to be like, no, I believe it. As long as you believe it's going to come back, you literally have all the data on your side. If you're buying when you know everything is underbought to a crazy degree, like I created this, it's very simple. Like I basically took recently, I was looking, because I was trying to figure out, okay, where could the bottom actually be in like a worst case scenario? So I created 4 like kind of floor models for Bitcoin. And one of them is based on the Mayer multiple. And just looking at, historically speaking, I said, well, what's the biggest multiple to the downside we've ever been away on the Mayer multiple? And I found the exact bottom, or the data point that was the biggest difference to the downside. And I said, well, that's the bottom, because in 10 years, we've never printed a data point below this. So I'm going to say that's the bottom. Obviously, we could still go below it, but if you haven't printed a data point in 10 years, it's a low probability, right? So I said, that's my bottom. And then I said, well, what's a place where only 0.5% of the data is below that point? And I said, well, that's another unlikely level for us to go below. So that you can do that with all the indicators. You can say, like, where's the levels? And I mean, if you're only below this level for a few days, you know that you're buying at a really good discount if you just look at where you're getting in. It's the same idea with the risk metric. It's like the risk map. It's saying like, okay, well, you know, you're buying at a low risk. If you're buying at where the data set is to the downside, you just know you're getting a good entry, historically speaking. Like, I mean, anything can happen. Obviously, there's still risk with Bitcoin. I mean, you get a black swan event, everything's out of the, it throws some things. Well, I mean, if you just look at Bitcoin, we've had these black swan events somewhat. Like COVID was somewhat of a black swan. It was an unknown event. And even in that event, we never went below those lines. So you just kind of know that, you know, and those lines are right now are sitting between 20 and 25,000. So, I mean, for us to go below 20K right now would actually break four of the floor models that I created. I created another one with kind of to do with mining, and that one's at 20,000 right now, or 21,000 right now. So like, it just, people are worried about going below 20,000 or worried about going below 25,000. And it's just going to take an extreme black swan event, in my opinion, for us to go that low.
It's unlikely to happen, isn't it?
Yeah, well,
very, very unlikely.
Yeah.
20
maybe if there was a black swan. I couldn't see it going below 20. And we did, I mean, we haven't topped in every other cycle. If you look at the Bitcoin investor tool, we normally peak above that 2-year moving average multiplied by 5. And we came close. We didn't peak it. So,
well, we had, I mean, 100%. Like, I think this is something also because people, like, naturally, everyone wants to look at the past data and they want to compare the cycles and they want to say, well, you know, how far could we go down? People are saying, okay, we're in a bear market. We could go down 80, 85% if they believe we're in a true bear market. But the thing that they're not considering is those 85+% drawdowns we've had historically, or 80% drawdowns to the worst point of the bear market. Those were after parabola blow off tops.
Runs, yeah.
Right? And this was the first major top we've had that was a distribution top. It was 100% a distribution top. it played out over months instead of over weeks. And it was a Wyckoff distribution event, most likely. And so, you can see, if I look at the on-chain data, you can actually see the difference on all sorts of metrics. You can compare the tops and you can see the distinct difference between, 2013's peak, 2017's peak, and the peak we had in April of 2021. It's very different. Its signature in the on-chain data is very different. You can even see with the realized profit taking, they took it at multiple times. There's actually 5 or 6 days where there was over 5 billion in profits taken on those single days. Whereas all the previous peaks, you can see all the profits were taken over a span of a couple of days that were right together. Whereas this was actually distributed over a week, weeks and weeks and weeks. It was not the same thing. So because we had that, and I believe most people were expecting this cycle to go to over 100,000. And so because we had distribution event, and because most people, I don't believe the long-term holders believe it's the true peak for the cycle, or they're just not willing to sell at those multiples. Because we didn't get to extreme, like there's something called MBRV, which is essentially the cost basis versus where the price is for these long-term holders. And you can see how much they're up on their position. And the multiple that they had in the previous peaks was so much higher than the multiple they had in April. And that's why a lot of them didn't sell. And so there was less new capital that came in. As far as the short-term holders, there was less new money that came in. And so basically, I just don't feel like I just don't see us going down these crazy levels, because we didn't have that extreme top. So why would we have an extreme bottom? Especially with the adoption curve and all the capital coming to crypto. And now it's just a different market, comparing 2017 and 2013 to now, there's just more demand. Yeah, 2013, like there's just more demand now. There's more institutions, there's more people that would buy these lower prices. So I've been talking about this for a while. Like I just don't see, I get it. We can have these wicks down from a liquidation event, to the downside, shorts or longs that get liquidated. And we just cascade down. We can have these extreme events where all of a sudden we're flash crashing down, but to stay at like 80+% levels, to stay at 20,000 for a long period of time now, the demand, in my opinion, would be so strong. I don't see how that happens.
Like demand, look, there's definitely a supply shock. I mean, with exchanges pulling them off and Bitcoin off exchanges and that, we do need some sort of catalyst for demand.
Yeah,
I mean,
exactly.
Yeah.
That's why we're stuck in this. In my opinion, that's why we're stuck in this range.
When you look back at previous cycles, do you notice that there's always a
trigger event,
a pause in the market cycle? So is this what we're in? We're like this mid-range pause in the market cycle before we have a blow off top?
Yeah, I mean, it's tough, right?
I mean, this is obviously a lot more extended than the previous two.
Yeah, I mean, I can give you my opinion on it, right? So like, obviously everyone's going to have their own opinions. There's going to be a lot of different ways to look at the same thing. And there's going to be a lot of different words, like people will use different words to define. So it becomes a little bit tricky, but I would say, obviously, first of all, that there's really not that much data to look at. I mean, Bitcoin's only been around for so many years. There's only so many cycles to kind of analyze. You can analyze them in different ways, but the way I'm looking at it and the way that I believe makes sense to me, and the way I'm going to keep looking at it this way until I see something dramatically change from or deviate from this model. To me, it just looks like we're in a drawn out version of 2013. Like I don't see, I mean, I look at multiple on-chain metrics, and I know it's not going to be like, it's a rhyme of it. So like, obviously it's not going to be like a 1-to-1 or anything crazy, but it's just, that's the model, in my opinion, where I just believe that, just like 2013, we had that initial top, and then you had this.
Did you have a pi cycle top in that initial top?
We had, so the pi cycle across in both of the 2013 cycles, or both of the 2013.
Which is what's happened now. We had one, and then we potentially could have another one, which will be parabolic top.
Exactly. Like the pi cycle is a really good metric in that it's one of the only metrics that's very accurately called the distribution and the parabola top. So like it was really impressive to see that it actually was, I think, it was a day difference, or on the day of calling the peak we had April 13th or 14th. So it was just bang on. But I did some math on the pi cycle, and I'm not convinced it's going to cross on this next top. I mean, it could, but I just feel like it's because of the size of the market. It would actually take really high levels for us to cross. And I mean, it would I did a very basic simulation. I'm not a mathematician or anything crazy, so I'd like to get someone online that I contact that can actually run like really good models for the pi cycle and see if like it can actually cross, because yeah, I believe it. Like when I was looking at it, we'd have to be like over 300,000 for it to cross at this point. So I like even higher, like it was even up to like 400,000 or 500,000 for us to get across. So at some point, I don't know if that metric will work, but I mean, it's been so accurate, and I don't want to say that definitively because I'm not a mathematician. It's just when I started to kind of crunch some numbers, I was just like, okay, I don't know if this is going to be reliable. But anyways, that's that. But sorry, to finish your question. Yeah, it's just, you know, basically, it's really interesting because I've come to the conclusion now, in my opinion, that we've been in a corrective phase. I don't want to call it a bear market, because a true bear market for me, you know, is well, I mean, you could say it's a mini bear market, but it's just like a drawn out, you know, if you look at historically with the crypto, we've had these multi-year or at least 1 year drawn out, you know, huge, being down 80+%. I just don't feel like we're in a true bear market where,
yeah, it's a technical bear market. It's not a true bear market.
yeah, exactly. Like TA, like yeah, exactly, technical bear market. But like for crypto, like there's all sorts of different definitions. But I would say, like, I don't feel like I don't feel like we're in a bear market. I just feel like we've been in a corrective market. We've been in a bear market for demand since the April 2021 peak. And I believe we've been in a corrective market since the April 2021 peak. And the reason why is because when you look at all the metrics, there's only a couple of them. We look at the metrics for demand, there's just a drop off, like complete drop off. And a lot of the metrics, if you look at them, they actually peaked in that April peak. So even though we had technically a higher high, you know, in November of 2021, that was, if you look at all the on-chain data, that was not our true top. Like it was a top, obviously it was a higher price, but it was very unique that happened. So I think it's thrown a lot of people off because they thought, oh, we've been in a bear market all this time. And, you know, November we put in a high and that was our, you know, and then they're thinking like, okay, now we're going to go in a bear market. But I'm saying, and what I've been posting about is, no, I believe we had I guess you could say an impulse uptrend. You know, I call it impulse uptrend instead of a bull and bear market just because I find it better terminology. But impulse uptrend we had until the April 2021 peak. And then we've been in a corrective phase of the impulsive uptrend over the bull market. We've been in a corrective phase since then. So if you look at that, you know, we're going on 10 months where we've actually been resetting a lot of our metrics. And and that's where, if you look, and people have been posting about this, you can see a lot of these on-chain data points, we're hitting like the bottom. But it's interesting how we're hitting the bottom at times in the past where we've been down 80+%. So it's just really interesting to see how all the stuff is reset. The supply side stayed bullish, because if you look at, that's why I believe we're in a very unique cycle right now, because in 2017, after the top in 2017, we lost demand and supply. We had a huge drop off in demand. So we went into a bear market on the demand and the supply side. The difference between that and this cycle is when we peaked in April of 2021, we never went into a bear market on the supply side. The illiquid supply has continually trended up. We're at like a 5-year high now for percentage of coins illiquid, and also for the amount of coins illiquid, we're at an all-time high. So I could talk about this with so many metrics. It's hard without the charts, but basically it's just unique because after 2017, you know, the liquid supply dropped off. The more coins went on the exchanges. We didn't have that happen this cycle. So it's just been like, I think what's happened is, you know, we had essentially this double top, right, of the price, you know, between April and November. And it's just scared away a lot of retail, because retail being down 50%, like in 2017, we had a 30%. Yeah, I mean, in 2017, we had multiple.
Clancy, if I could just jump in very briefly. Yeah, I'm going to have to disappear. So thanks so much for your time today. For someone who calls themselves a non-technical analyst, it's absolutely incredible listening to you. So congratulations. It's amazing how
I'm hanging out with a lot of
people,
TA guys.
People dive in at, you know, you arrived in 2017 and you were suddenly 50% down. And then here you are, you know, 2, 3, 4 years later, absolutely just loving it. So
thank you.
Carry on with where you're going
Jake's
with
off
that.
to the beach.
Thanks
with
so much for your time. No, dad duties are kicking in. So thanks so much for sharing all that. And I'll be listening to the rest of the conversation later. Thank you.
Thanks very much, man. It's nice meeting you. I appreciate it.
So, just wondering, you know, with that market risk map, you know, you shared a picture or screenshot on Twitter of it. Have you got it over the entirety of the? Do you want to share that and maybe have a look at that?
Yeah. I can't share it. I'll post it later.
Okay, yeah, because I'm just curious to see what it looks like further through the other cycles.
Sure.
You know, yeah, because
I would show you guys, like I would live stream it. It's just it would show how I created it in Glassnode. So that's the only reason why. But I'll post it on Twitter today. I've been meaning to. I can tell you what. Basically, it's the exact same as this one. Like it went into so all the peaks we've had, it's been between 8 and 10 on the metric.
Okay.
So
and the DCA buying is always down the bottom of that 1, 2, 3.
Yeah.
Okay.
Yeah, it's worked really well. Like you remember that plus token Ponzi scheme we had in China? I don't know if you remember that. It was like this little bull run we had, like coming out of the bear market of 2018. Well, on the risk map I have, they went to, I believe, an 8 there, and then it went down to a 1 during COVID. So COVID was a 1.
Okay.
And
well,
then,
because that was just too much too quick. And I mean, this cycle as well, we've noticed, you know, there's a lot more media attention, a lot more positive news from institution and all that good stuff. So that's why, if we're thinking of walking the dog, the dog's violently walking. Like this.
Oh yeah, no.
I mean, the drunk and the dog. So the drunk is just violently going like this, and the dog's just. Yeah. So that's probably why we're having these wild fluctuations in price of shooting up too quick, coming down. You know, whereas 2017 was a lot more steady and natural.
Yeah, well, 2017 though, we had. I mean, I wasn't here for the bull run. I mean, I got in at the very top, right? So, but my understanding with the bull run is, if you look at the historical price action, I mean, there was a lot of 30% corrections or so, 30 to 35 or 30 to 40% corrections. So there was, but the difference, I think, in that cycle with 2017, going off memory, was we had these 30% multiple, kind of almost like an earthquake, right? You have like these small shocks or these small earthquakes that prevent maybe the bigger ones, but we didn't hang out for as long at those correction phases. Like it might have been only multiple weeks or a month or two. Whereas this cycle, you know, we've had these 2 drawn out 50% corrections of multi-month. Essentially, we've had too many bear markets, we've been in a corrective phase. These corrections so far, I'm really interested to see if they continue to play out this way, because you have a lot of people calling for lower levels. But if you look at the on-chain data for the sell side, it's almost mapped perfectly the last correction we've had, and the reason for that. I don't know if you guys saw that chart I posted, but basically it's to do with sellers that are selling at a loss. So it's realized losses. You can actually see kind of the emotions of people that are shorter term holders, right? So the people that essentially got in near the top, and see how they sell and how they capitulate over months. And it's just to do with how much they're down on their position and the max pain, but you can just see it happen, right? And there's these patterns. If you go and you look at it, we've come out of that. So we've actually gone through, in my opinion, like the full cycle of that seller capitulation. And it just, you can see it. There's like 3 phases where there's a whole bunch of panic selling capitulation initially. The prices are just dropping. There's liquidations. People are panicking.
Which was that May? Was that May? That 50% drawdown?
So I'm talking about last year, basically after the peak in April, and then May. It's exactly May.
Yeah.
Because there was a period of a few weeks after that
was massive panic sell. I mean, I was lucky enough to pick it up at around 31, I think.
Oh wow, that's good. Yeah.
Jake and I have these unique indicators that we've developed to pick bottoms and tops, like your laddering out and dollar cost laddering out and dollar cost averaging in. But what we do is, instead of doing it over short time frames, we do it over 3-year periods. So we catch the tops. So basically, we can catch knives, but with gloves on. You know.
No, that's the exact same strategy and approach I have.
Yeah, because the problem with a lot of retail traders is they don't have that patience, and they caught up in that emotion of seeing that fall in price, and they just panic. And with the strategy that we've developed removes all the emotion, and it's just these indicators that pop up and tell you exactly when to buy, exactly when to sell, and it's over 3-year periods. So, which is also really good for tax purposes. You know,
100%. Yeah. I'm in the exact same. I have the exact same philosophy, really. And I know there's a huge demand for people that want to do more like multi-month swing trades. So, I'm seeing if there's any ways to create like metrics for that. But mainly, I'm exactly in line with you guys. Like I'm looking to trade, get in and out in a DCA way over multiple years, like 3, 4, 5 years. Like I'm a long-term holder. So I'd love to compare what you guys have and look at
Yeah,
what you can
I'd love to sit down and share that with you.
Yeah.
So you got in at the 27 top. So did you
Yeah,
DCA on the way down?
No, I didn't know what I was doing. No, what happened? No, I had no clue. Like what happened was
because most DCA proponents will say like you just DCA in weekly, and whether you're going down or whether you're going up.
I didn't have a clue. I didn't have a clue back then. I had never invested in any market. I didn't hold any stocks. I basically was just working full time on my business, like crazy hours a week. And there was a guy working for me at my wellness center, and basically he bought one Bitcoin at like 2,000, and then he sold it at the peak, right? And so he told me, it was just like the weird how stuff happens, but he told me about it. Like he started talking about Bitcoin, I guess because the price was going up, but like near the top, right? And I'm just like, what is he talking about? I had no clue. And I'm just like, you got it at 2,000 and now it's almost at like 20 or whatever. And I happened to be looking at the charts when he wasn't even working, and I'm like, I was texting with him. I'm like, dude, your investment's going up like hundreds of dollars an hour here. Like, what's going on? And I was just awestruck, and I was kind of like almost euphoric for him. I was going through like that emotion without even being in the market, just because I was friends with him, and I knew his actual goal was he just happened to buy at 2,000, so his goal was a 10x, so it happened to be basically at the top. And but yeah, anyways, I after that happened, it got my attention, right? Like it created interest because I went through that with him, and I ended up essentially getting in after the peak into, actually I bought EOS.
Yeah.
So I just held one altcoin. I'm a kind of an all or nothing personality, and I research a lot of coins, but I decided to buy EOS and literally put all my money into EOS, and I just held it for the entire bear market. Because there was a lot of promises with that project. They raised $5 billion, and I was just like, and people will laugh now because EOS has done nothing. I think it's borderline rug pull scam over multiple years, but basically they were hyped. At one point, they were the 6th largest coin on CoinMarketCap, and they had all this hype, and they were going to be the Ethereum killer. Legitimately, at the time, everyone was thinking that, they raised so much money, and that's why I researched them a lot, and so I basically held that the entire bear market, and then I realized, kind of after the bear, like I kind of realized at a certain point, like, no, this is a garbage project, and so I sold into stables. And then I actually got in to Bitcoin and Cell Token at the bottom of the COVID crash. So I identified like this is like at least I figured out after going.
So you're basically a self-taught. Like everything you know is self-taught, and all your metrics and pulling off everything off Glassnode. I mean, your Glassnode subscription must cost you a fortune to then put it out for free content as well.
Yeah, they do have there's a huge difference in the cost with the tier 2 and tier 3. Like it's $800 US a month for the tier 3. So it's a big investment, but I did well. I've done well with my investments with crypto. Even though I haven't sold them, I know I sold my business, and I feel like I'm at a position where it's okay. And I'm just so passionate about this. So like I was trying to create an index for the cycles, like pulling together. I had like over 20 metrics I was pulling together to create this 0 to 100 score.
What happened with that?
Well, I'm still doing it. It's just
you just had to pull in a lot of. I think you had to pull in a lot of manual data to do that.
Exactly. Yeah, so at the time, I was I'm not very technical and stuff, right? So I partnered with some guys that are technical, and that's where I'm working with the guys from Cultivate Crypto. But basically, I was doing things manually, like literally with spreadsheets, and it was time consuming, but I just had to go through the exercise of figuring out like how to do this. So I ended up, like I wanted Confluence. So I wanted to have the most amount of data. And the funny thing was I spent months doing this, right? And it was right during the April peak. So I was like creating this index, and I'd been doing this for a while, and I had my 20 metrics for Confluence, and I made the highest peak of the data, I made that 100, and then the lowest peak of the data I made 0. And then I basically combined them all into a score, and then I looked at, it was pretty accurate, like as far as like historically speaking, it had done well. But the interesting thing was during the April peak, during that distribution event, half my metrics were signaling it was the top and the other half weren't. And so, and I was sitting there looking at this and I'm like, this is really weird. How is it? Because I knew the pi cycle was crossing. I've been following the pi cycle as one of my 20 metrics. And I actually removed the pi cycle from my index because I said, this can't be the peak. And the pi cycle is invalid now. And the pi cycle was bang on. And so it was just funny how the metrics I removed from my index at that time were the ones that were actually the most accurate. And like looking back, it was interesting to go through that exercise. And it almost was like a dry run, I believe, for the true peak. And so it gave me an opportunity to kind of understand more, like, because I didn't even factor in at the time we could have a distribution top. All the metrics I was looking at, I was thinking like they're all going to peak the same as the previous cycles. We're going to have a blow off top. And because we had a distribution top and because some metrics basically, you know, went to 100 and some didn't or whatever, it made me understand that I need to have an index that takes into consideration different possibilities. So now I'm working on index, and I've been working on it for a while, for blow off tops and distribution tops. So having two separate indexes to identify that way, you know, you can be looking at both and you can say, okay, you know, we're getting close to overheated on either of these. But honestly, like what I put out on Twitter with the risk map, that is essentially an index. It is essentially the equivalent of an index for the cycles. And so it works. So I feel like I have that out, but I do want to create one that's using like more metrics than that one is, but it's kind of a good one to have, just anyways. But
Fancy, I've got a short period of time left, but I've got a couple curious questions I wouldn't mind asking my friend. Fascinating story. You mentioned a couple of times through all of this that part of your transition to the crypto space was you know, removing yourself from maybe a traditional revenue stream with a business into the crypto space. Tell us a little bit about that point. You mentioned that the employee that introduced you in 2017 to crypto. I'm a business owner myself. I work in the civil structural engineering space, and a lot of the thoughts that you've just mentioned really resonate with me quite heavily about a change of direction at some point in career. What were a couple of those trigger points that made you realize Bitcoin and maybe the power of Bitcoin and where you've landed today to move away from your business or traditional business into a completely new space that, you know, somewhat self-taught, which is pretty phenomenal?
Yeah, I mean, it's everyone's situation on this is going to be so different, right? So there's a whole bunch of reasons why I have a unique situation that allows me to kind of been able to allow me to do this. So first of all, it's kind of my personality. So I just can't. I have to be all in on something if I'm going to do it. And I've actually had like multiple things in my life where I've completely like gone 180 and gone in a different direction. And like I get in these routines where I'm really focused on one thing, but I'm okay to switch. And I've just had like certain passions in my life that just define a period of time. And like it was so obvious that crypto was going in this direction. I'm just so fascinated by it. And it's actually the thing that's probably been what I meant to do all this time. Like I was really involved in athletics when I was younger. I played basketball in university. I was absolutely obsessed with basketball. And I didn't do well in school. Like I went to university on a basketball scholarship, but I dropped out after a few years just because I didn't enjoy that. I got injured playing basketball, but I didn't enjoy the school side of it. There was never anything that I found that was really I was passionate about. But looking back, what I excelled in is math. I got straight A's throughout high school. I absolutely loved math. But I didn't think of going into like university to be like a math teacher or something. Like it wasn't like I needed something like interesting to apply the math to, right? And pattern recognition is another thing. So I actually have something called phonological dyslexia. And so when I was in grade 12, I failed English 12. And my mom said, I think something's wrong because I got really bad marks in English 12. And mostly because on my provincial exam, I got butchered for spelling. So I actually got 30% because my spelling was so atrocious. And so my mom took me to a psychologist, and they ran all these tests they can do to essentially look at your IQ. And then they see how many standard deviations away is your IQ from your spelling and reading levels. And what they determined was I was actually reading and spelling at a grade 3 level in grade 12. And my IQ was above average. And so I was so many standard deviations away from my IQ that they said you have phonological dyslexia, which dyslexia just means problems with reading and spelling. It doesn't mean you flip around letters. I just cannot sound out vowels. So I actually can read and spell fairly normal today. And it's because I've memorized literally every word, just from spell check, just by going through the process of constantly correcting yourself with spell check, and you just learn to spell. And so, yeah, but the interesting thing, when I had that like multiple day assessment done, where this lady was super detailed, I was very fortunate. She wrote like a 20-page report on me, basically saying like, she went through all this stuff, right? And what they found, which at the time they were focused on my so-called disability, but what they didn't focus on was the fact that I was in the 99th percentile for matrix reasoning. And so looking back through my report as an adult, I said, I'm in the superior category for matrix reasoning. Why didn't we focus on this? And what matrix reasoning is abstract connecting of dots. And essentially it is what, a big part about investing is you're taking all this data in and you're having to connect it and say, like, either if you're doing fundamental analysis on a project, you're saying like, okay, if I believe in investing in this crypto or in the stock, like, why? Like, you're taking in all this data and you're having to formulate an opinion. It's the same thing with the on-chain data. Is you're taking in a lot of data points and you're connecting them. So this is like something I'm meant to be doing, I believe, just based on my brain. So I have like a unique gift when it comes to connecting dots, like abstract dots. Like,
that's absolutely.
And I figured this out. And this was when I was 20, and now I'm 35, and I finally feel like, this is it. Like, so, but yeah, I didn't fully answer your question. Like, I don't have any kids. I have a partner that's extremely supportive. I had a business partner that was extremely supportive, that actually told me, you should leave the business because I can see you're so passionate about what you're doing. Because on my days off, I would be doing it full time. I would be at my business on the computer. I owned what's called a flotation center. I'm not sure if you guys know, but you're basically floating on salt water. And I had infrared saunas and stuff. But I would put the clients in the room, clean all the rooms, put everyone in, and then I'd be on the computer, like, just obsessed with crypto, on my phone, obsessed, like listening to podcasts while I'm cleaning the room. So like, even though I was working all day in my past business, I was always kind of in and out. I was always like one foot in crypto, trying to do it as much as possible while still maintaining my business. And it just got to a point where my business partner said, like, this is what you're meant to do. And so, yeah, I sold the business, and I'm in Mexico, and I'm living extremely cheap. I'm actually staying at my partner's parents' place. They have a big house here, and so we have our own space. And
you're out of the Canadian nightmare as well.
Yeah, I mean, that was part of it. Is I don't want to get political, but I'm not in alignment with some of the stuff going on in Canada, unfortunately. I mean, Canada is an absolutely amazing country. I mean, it's
very sad to see what's going on there. I mean, I'm in Melbourne, Australia, and we've been through what Canada's going through now.
For sure.
I'm sure we can go through it again, but we were the most locked down city in the whole world.
Wow. Yeah, I know. It's really nuts. Like, because as Canadians, I mean, growing up, like, I just so fortunate. Like, I mean, Canada, like, I mean, there's a lot of beautiful places in the world. There's a lot of amazing places, but like where I grew up in Victoria, like Victoria, BC, is just one of the safest places on earth. Like, and it's just so beautiful. And I never like, thing about Canada is, like, you don't necessarily get involved in politics because you take for granted how great things had been for so many years. Like, I mean, we had true freedoms, we had no crime, we had just a beautiful country. And to see what's happened, like, I saw this coming a mile away. Like, I knew, I could just tell the progression and how things were going. And I just said, like, I told my business partner a long time ago, and I just said, like, I'm not in alignment with any of this stuff. Like, I just feel this is a massive overreach by the government. And so I basically, anyways, I don't want to get into that too much, but I wasn't not in alignment with all the stuff. And so that's another reason I decided to come to Mexico. Is my partner's from here, and we hadn't been here for a lot of years, and she, wanted to see her family and stuff. And I just didn't want to be in Canada with what was happening. And so I want to go back there once things change again. But for now, it's just being here is great.
How's Mexico with mandates and masks and things like that?
Yeah, I mean, I don't go outside a ton. Like, I'm just always on the computer inside. But when I do go out, I mean, things are pretty much normal in most places I've gone. I mean, the thing here that's very kind of interesting to talk about relative to crypto, because the society here is a lot more decentralized than Canada, right? So like, meaning it just on many levels, like, there's just a lot more people, first of all, but there's also a lot more smaller businesses that it's just hard to keep track of what everyone's doing. I mean, in Canada, like, there's so many box stores now, and there's a lot less people, things are spread out. and there's just so much like red tape with opening a business, and they keep track of everything so well. You can't just pop up a taco stand on any corner. Like here, you walk down the street, like if they're going to say like, oh, you can't go to the grocery store without a vaccine passport. I mean, here you can walk down to any neighborhood and someone's making tacos out of their driveway. Like you can't regulate that. You can't, there's not enough people that can keep track of every business in Mexico. Like it's just, so it's a lot more decentralized here and chaotic, and also people have guns here. I mean, on New Year's, there was.
Is Canada not like America with guns?
I don't own any guns, and I'm not super on top of like.
No, but like, are you allowed to own guns in Canada?
Yeah, you are. I mean, there's a lot of hunters and things. Oh, yeah, there's a lot of hunters and a lot of people do own guns. I know there was an event, like some shooting event that took place, and they limited certain guns. But yeah, I know we don't have as much as the US. Like the US definitely has a lot more guns in certain states than Canada. I don't know exactly how much, but there is guns here. Like there's a higher population in Canada with guns than a lot of other countries. But Mexico, I think there's a decent amount here. Like on New Year's, I mean, it's just what Mexicans do. But like on New Year's, my girlfriend says, don't go outside after midnight. Like we're not walking around outside. And because people just shoot guns up into the air here, like, and they're just all around the neighborhood. I could hear
the Wild West.
like machine guns. Like it wasn't just like, it was like bah, 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 bah. Like for literally an hour after midnight in the whole neighborhood, there's just guns going off, and I'm just like, okay, I like this. This is a population that's armed. I mean, this is good.
How do you go with the language, mate? Have you had much background with being able to translate?
No, I'm.
Was your partner your translator?
Well, this is the thing, guys. Like phonological dyslexia makes it extremely hard to learn a language. Because I cannot, like, I still haven't mastered it. Like, so, because they say sound out things, right, with English, right?
Yeah.
Or with any language, they say when you're trying to spell or read, like, sound it out. I can't. Like, so like my brain doesn't work for that. So, like Spanish has different letters for vowels. They have different sounds, but my girlfriend I'll try to learn stuff, but it's just like, it's a struggle. So, but yeah, regardless, my girlfriend is amazing for translating. And I have learned a few, like, again, it comes down to memorization. So I've memorized a few hundred words that I use.
So so I'm guessing you're going to have to get some beer, mate, and you come back with some cucumbers or something like that.
Yeah. Like if I'm going up by myself, it's a struggle, but yeah, people are pretty friendly here, and they can see like, oh, this guy's having a hard time. So yeah, I mean, yeah, I need to definitely learn more. And I will learn more moving forward if I end up spending more time here. But yeah, a lot of people also do speak English here and stuff. So it's a little bit nice. People are pretty good about it.
Oh, well, I've got to be super rude. I've got to.
No, it's okay.
That's all right. So in conclusion here, you're looking at the market. We haven't topped. We're not near the bottom. We're just in this range bound. And there's more to come still. I mean, even people who think of the 4-year cycle, maybe we extend out of that and whatever. It's like winter. We don't start winter bang on the first day. Yeah. Things can start either side, but I mean, I think we've still got some time before this 4-year cycle, if you measure from bottom to bottom, to finish. So there's lots that can still happen, but I'm still leaning more bullish with all the, all the news that's out and institution. I just don't see that we've topped. Like you say, there's supply. There's a supply shock, and then there's what was the other thing you said?
Well, the thing is, we have almost no demand. Like we've had such low demand, relatively speaking, for the last 10 months, but the price never went down to extreme levels because we didn't have a lot of sell pressure, relatively speaking. Like they're basically, like you said, the supply sides remain bullish. And so because a lot of long-term holders have not sold, you can see this across multiple metrics. So I'll quickly mention one. I did analysis on coins that have been held a year plus. So it's called like the hodl waves. You can see like, okay, these coins haven't moved in 1+ years, and you can see what percentage of the supply is in this category. And if you look at how much we dropped down from the peak we had in April 2021, we only went down half as far as we have with the previous 2 cycles.
Okay.
And so that means basically that the long-term holders only sold, because essentially every top is defined as old capital that's been in the market for a while, hitting their goals and realizing their profits and having a massive new capital coming in and buying up their coins. Like for example, the COVID crash, 10% of all Bitcoin were purchased in a span of a very short period of time. Between I think it was like $3,400 and $6,000 price, we had a ton of buyers come in. People talk about the sellers, like, yeah, we had a lot of capitulation sellers during COVID, or people wanted out because they were taking off risk. But 10% of all the coins, like a crazy amount of people came in and bought. And that's what I feel would happen if we went below 20,000. I think we'd have a ton of demand come in and a ton of people would buy. But the interesting thing is that because you define these switches in the cycle as all these new capital coming in and all these older wallets leaving, we only had a 50%, roughly speaking, version of that in April. And that's why I think the cycle's not over, is because there's not enough coins that have realized their profits and new capital that's come in. And there's another metric called dormancy flow. And I actually did a unique calculation with dormancy flow. Dormancy is again, looking at these older wallets. The way dormancy works is it's a weighted, they're weighting each coin on how long the coin hasn't moved. So instead of looking at the price of the coin, the last time it moved, they look at the days. So you have realized market cap, which is to do with when the coin last moved. So if a coin moved when it was worth $1,000, they categorize that as worth $1,000 today. But with dormancy, they look at, okay, that coin hasn't moved in say 400 days or something. So now we're going to weight that coin as 400 times that one coin, and that gives you a dormancy. So the dormancy flow, I actually took from the bottom of the bear market, the lowest price, to the peak of the bull market for all the previous cycles. I took the dormancy flow for each day, combined it up, and I made what's called cumulative dormancy flow for the cycle. And no one else has done this. This is a unique metric. I'm the only person who's done this. This might be a completely invalid metric. I have no idea. But I did it as an experiment to see, because I wanted to see, okay, how much actual flow of old capital, old coins has moved throughout the entire cycle. And again, if you look at it, we've done 50% for this cycle. So I've confirmed this across literally like a half dozen metrics that point to the fact that we're about halfway through this cycle. And you can measure that in different ways. And what will happen, in my opinion, is it doesn't mean that the time left is going to be the same as what because people would say, like, we're halfway through the cycle. Do you mean we're going to have another multiple years left to finish out the cycle? I'm not saying that, because all these metrics can go parabolic. And when we hit that true peak, once we hit over 100,000, I believe you'll have a lot of older coins sell, and then all these metrics will peak out. So my personal belief, and I mean, there's no one knows this, because we don't know when the demand side will come in. So there's just predictions. I'm not basing this on any specific on-chain data, but I think we're going to peak out Q4 of this year or first half of next year. I think that'll be the true peak of the cycle. And the reason why is because I think we'll have multiple catalysts between now and then. So over the next, call it 16 months or so, I'm just betting that we're going to have enough catalysts, and I know that the demand side is ready to go, and we'll have those parabolic moves. And so, yeah, I just, that's my bet. Like, and even if we went into a quote unquote bear market, we had a lot of older wallets get tired and sell. Say the stock market crashes and we have a lot of older wallets sell because they want to take, or big whales want to take off risk, and so they start selling, or whatever happens. I mean, I still don't see how we stay in a multi-year bear market, because unless it's kind of like a bet, it's an asymmetric bet. So you say, like, okay, well, is crypto going to fail? Are we going to actually like deviate from this growth curve? Like, I mean, crypto.
Oh no.
Crypto is clearly, as a whole, like crypto and digital, since it started, just like the internet, we're going through this growth curve. People are going to continue on this adoption curve. How do we not have event where big corporations announce they're doing something with Bitcoin, or sovereign nations, or there's going to be events over the next 16 months, in my opinion, that are going to cause a catalyst for the demand side. And then I just don't see how we don't run up to at least 120K. And like my personal prediction is between 100, or target, you could say, is between 120 and 180. That's just what I think. I mean, we could go higher, but I think 120 to 180 is kind of like a conservative, realistic goal, or realistic target. And yeah, I think, Q4 to middle of sometime next year, first half, is what I think anyways. But I never thought we were going to peak this year. Like I'm one of the, I mean, there was a lot of people on Twitter saying like, okay, we're going to peak. I was fortunate in some ways because I wasn't active then, but if you look back through my posts, I never said we're going to peak this year. I always expected it to be an extended cycle. And I actually was, I was posting May of last year after the peak, I was posting like multiple times on Twitter saying, this is not the top. I don't believe we've topped. And then we recovered, right? So like, I'm saying this again, I'm saying the same thing, basically. Everything I said last May of last year, I'm basically repeating the same thing on Twitter. Like, guys, I don't believe this is the peak, you know, whatever. Like, so we'll see, right? We'll see what happens, but
well,
yeah.
plan C.
I'll let you go, man. Sorry, I'm rambling a lot here, guys.
No, well, mate, I feel super rude, as you can appreciate, as a.
No,
that's right. We've taken enough of Plan C's time, and we'll wrap it up here. But I'd love to talk a little bit more with you offline and get your thoughts on. Yeah. All right, Matty. Thanks very much for joining us, Plan C. Thanks very much for giving us your time, and hopefully we keep in touch over the next 12 months and see how we're tracking with your indicators. And
thanks so much for the content you produce as well, mate. It's really appreciated.
Yeah, thank you, guys. Thanks for having me on here. And I'm gonna have to check out your channel more. And we'll do another one time here for sure.
Cool. Thanks, brother.
Thanks,
yeah, thanks, guys.